Hello, friends. Welcome to this Dirty Economics webinar on INR crosses. A couple of days back, a few days back, I'm sorry, received a viewer request asking for a view on Australian dollar and the Indian national rupee. So, what we're going to do now is, first of all, we'll try to uh, we'll discuss Aussie dollar in a bit detail, and then we'll go to Australian dollar, US dollar, and then we'll think about USD INR or what's happening with the Indian national rupee. So we'll get a broader picture of AUD INR cross in a way. So the first thing what I would want to do is shift your attention to the Australian dollar and New Zealand dollar pair, Australian dollar and US dollar pair. So this is the AUD USD pair, and as we can see, it's currently around 0.7552. And if we switch to a larger time frame, I can show you something very interesting happening here right now on the chart. Draw a falling trend line. It's pretty much at the trend line right now, so it's at a make or break level of sorts. So if we see a month end closing, that is the September 30th close is above the trend line, and it shouldn't just breach the trend line via sideways move. I would want to see it close above the previous month's high of 0.7760. And in that case, the doors would be open for a further rise. Coming to the fundamental side of the story, let's not go too much into the domestic Australian data, but the only thing that I would like to point out here is that the world is heading towards a fiscal stimulus, and if China is the one to come up with a massive fiscal stimulus effort, then I guess Aussie would rally sharply the way it did throughout 2009, 10, and 11 of sorts. And the other thing is that in case we see Federal Reserve stand pat, which I think it would, we at the most we could have one more rate hike, and then Fed would hibernate for, in my opinion, it would hibernate for a couple of years unless there is a stock market crash. However, the likelihood of a stock market crash is low, in a sense that if we have a major bout of correction, the governments would be forced to come up with a fiscal spending effort, and so Fed would be saved from initiating a QE program or going into the negative territory. uh, and in case the Fed doesn't even hike rates once from here, uh, the Reserve Bank of Australia would be, would feel the pressure due to the yield differential. The Aussie would strengthen, and the RBA would have to, uh, cut rates more aggressively. On a longer term basis, my view is quite clear that the RBA and RBNZ are heading towards a zero lower bound, and that essentially means the prospects of the rally in the Australian dollar are not so significant. Overall, as I said on the charts, I need to see a convincing breach of the falling trend line on the monthly chart, and that would convince me that the 3, 4, almost 5 year long downtrend has ended. The pair topped out in August 2011, and since then has been making lower highs, and then it simply began sliding fast in 2013, from June 2013, and hit the low of 0.6827 in January 2016. So that's a crucial point. Coming to the Indian national rupee, on I don't really read Indian national rupee on charts, especially what I mean to say is that I don't take the bearish calls that seriously, even if the charts are showing. Simple reason is that the RBI simply won't allow the rupee to uh, witness significant appreciation. So what that does is that whenever there is a broad-based USD selling, these majors like Australian dollar, Canadian dollar, Euro, pound, they tend to rally sharply. On the other hand, the RBI intervention, keeps a tab on rupee gains, which indirectly means that the INR process, the INR depreciates against other majors like Australian dollar or New Zealand dollar, a pound or euro for that matter. So what I would like to do here is simply go for uh, uh, the cross and would like to see Australian dollar. And so over here, what we have is the Australian dollar, New Zealand dollar chart. These are the couple of few moving averages that I use: 5 DMA, 10 DMA, 50 DMA, 100 DMA, and 200 DMA. And the first thing that comes to my mind when I see this chart is uh, the head and shoulders breakout, which failed apparently. Prices are back above the neckline level over here, and bird is currently hovering around 50 half. And right now it's there's nothing really on this chart, on the daily chart. So what we would have to do is just shift to a long term chart. This is the monthly chart, and falling trend line, I guess, has been breached. But the subsequent, the rally has been repeatedly capped around 52 levels or so. And if you also look at the 50-month moving average, it has topped out in a way. So what I feel is that given the fundamentals of the AUD USD pair, that the thing that I talked about, the RBA, eventually it would be forced to cut rates and move towards zero lower bound. And that's a long term thing that I'm talking about, and that fits really well with this AUD INR chart. If you look, it's a sort of a signal that a fresh downtrend is about to resume. So what it means is that either INR is going to see a significant round of appreciation, or the AUD USD pair is going to depreciate sharply. As of now, if you ask me, RBI would simply not allow INR to appreciate sharply against the dollar. And so during the uh, bouts of broad-based dollar selling, expect RBI to step in and curb appreciation in rupee. But at the same time, note that so what that means is that this chart, the stopping of the AUD INR pair, what it tells me is that the weakness that is going to come through is it's largely going to come through from the AUD USD pair. And that means the pair is likely to fail at the falling trend line that we just saw. Let's go back to that. So what the AUD INR chart tells me is that the AUD USD pair would most probably fail here and would resume a fresh slide. On the AUD INR chart, as I said, there are multiple candles, monthly candles with long upper shadows in the range of 52, and such candlestick formations suggest a bull exhaustion. So, I don't, what this chart in total, what this tells me is that INR would appreciate to some extent. We are likely to, see INR appreciation. However, that would be curbed by RBI buying dollars for obvious reason to fund the current account deficit. And uh, so what indirectly that tells us is that AUD USD pair is likely to suffer sharp losses in the future. So this is my take on AUD INR. I would advise you to initiate shorts every time the pair is around 52 and wait for the target of 48. Have faith in the bear trend from here. The monthly 50 MA average has topped out, and it's sort of created a rounding top the 50 MA average, and it's now indicating that prices are likely to go lower. So the first support would come around for 48 levels in my opinion, and the next one goes to 45. So over the next 6 to 8 months, I guess 45 should be the level that could possibly come in the AUD INR pair. So I hope I solved your doubt, and if you have any more queries, do drop a message. Thank you.